Alright guys, so I want to do a quick market structure tutorial for you guys. I hope you guys can understand, and I hope it isn't too complicated. I want to get right into it. This video is meant for forex traders mainly, but if you're a different type of trader, that also works as well. Yeah, so let's get right into it. So yeah guys, first thing I want you guys to look at here when you're on a chart is I'm on Australia Canadian dollar, and I want you to notice something. Over here to the left, we had market structure that was obviously bullish, right? And why was it bullish? Because we have highs, highs, low, low, and yeah. And so this is what makes the bullish structure. And this 4 hour hiking, I actually sometimes will switch my chart to the Heikin-Ashi chart to show me demand zone. So this was a demand zone in the 4 hour Heikin-Ashi, and the demand zone was here. This little wick, this little dragonfly, this doji candle right here. This was my demand zone. I use that for demand zone sometimes, and I switch the charts. That's how I trade sometimes for confirmation. And I noticed that since the strong demand was broken, that means that the sellers were in the market. How did I know this? Well, because the 4 hour demand, if you notice and you look down here on the volume chart, the demand is high. But we, price action, right here, broke. Sorry, let me turn the chart back. It broke that demand. And so the second I saw this gray box get broken and price continued to go downward, which was right down there. I mean, it didn't technically break the entire demand zone, but here's where I entered in. I don't know if you can, that's why I can't see it. Sorry, guys. You can't see because I wasn't zooming in. So that wick right there, when it tapped in like that, I don't know if you can see that. So look at the wick. When it tapped in at low, I was like, okay, so if it didn't tap in here and then react off of that, it's definitely a faulty demand zone. Because if this was a strong demand zone, when the price originally came down here, it wouldn't have done all this small, short-term price action. It would have just went immediately. There was a lot of demand. So that's how I know. I was like, okay, I'm not going to buy off of that because usually demand zones should react. I would want to see a reaction going straight up. And instead, we had this kind of consolidation, a little bit weirdness here. And price did go up a little bit, but it didn't go up sharp enough. Because right here, we had price go up, breaking this high over here. And the second I saw price come down here, I was like, okay, yeah, we're going to continue to go back up. And I entered right there at that gap right there. So the gap was right here. I only trade gaps and order blocks. Gaps are like one of the main setups that I trade. They're literally everywhere, and they're created by supply and demand. If there's money coming in the market, they're created. And if there's money coming out of the market, you can find these imbalance gaps, fair value gaps, gaps in general. So yeah, so what I did was I saw that entered there, and then I'm still in this trade. I'm literally still in this trade, and my take profit are these gray zones down here, and these gray zones down there aren't just regular normal, aren't just any zone. They're actual demand zones on the 4 hour time frame that price did not fill. So these are areas that price did not fill, gaps. That's why they're called gaps in the first place. That's why it's called unhealthy price action, because healthy price action has a retracement. And yeah, let me see. That's pretty much what I was doing. It's still going down now. And I also had UJ here because I was thinking of trading this today because we have some UJ news. I don't trade any forex pair unless there's high volume news. So I'm only trading when I'm trading today because there is yesterday there was all news at 9:30 p.m. and my trade is still running from yesterday. Today I didn't find a setup today. This is the trade I showed you earlier. This is from last night. Today I'm gonna I might get into a JPY trade later today because the market actually says that there's going to be Japan news tonight at 7:30 to 11 p.m. And then I'm obviously going to find a trade before or after them. I'm not going to ever trade during the news. I always tell people to trade before or after the news, and that's pretty much what I'm going to do. And so that's really my cheat code to when it comes to finding opportunities to find trade setups is the economic calendar. The economic calendar is basically a calendar that I like to call the money calendar because it shows me when there's money coming in and out the market. Especially when you have the economic calendar set to showing you high impact news. Because if it's on low impact news, you're only going to be shown low volatile, low volume news that isn't going to significantly significantly move the market the way you need to do when you're doing when you're trading high volume news. High volume news creates market movement and creates unhealthy price action, and thus creates those gaps and creates the trade setups that you need to trade in the first place. So my tip for you guys is to always trade and keeping that in mind. So if you guys want to trade, let's say USD you can trade that both during a London session, New York session, or Asian session, because Japanese side of the pair, Japanese yen, and then the USD you can trade during New York session. I typically trade one setup per day maximum. I don't trade any more than that for a reason, because I trade about 4 to 5 high quality trades per week. I don't need to trade that much, especially when your account size is large. You don't need to take 6 trades a day. That's usually for like smaller accounts, and even on then I don't recommend doing that, because it's, unless you have a strategy and you know what you're doing. I always recommend taking like one trade at a time, and then if you're done for if you take a trade and you lose, you are done for the day. And if you take a trade, you win, you're done for the day. Whatever the outcome is, you're done for the day after one trade. And that robotic system that you have in place is what allows you to actually trade consistently and trade in the way that you're actually finding setups. And yeah, that's pretty much what I think. So yeah, guys. Let me show you guys something else. Another tip for trading UJ is, since UJ moves slow, typically it's a slow moving pair, you're always going to want to trade it starting on the 5-minute. So the 5-minute I use for market structure and entries, and 15-minute is cool too. 15-minute too, and then the 1 hour is like the 4 hour on the UJ pair. The 1 hour chart is basically the 4 hour time frame on UJ, and on the 1 hour chart I use that for shifts in the trend. So the 1 hour chart is my long-term trend, and then when there's a trend shift, then I go on to those smaller time frames that I just showed you, so I could actually find a setup. So right now, I'm expecting UJ to disrupt this previous trend that you guys see on the screen here of it being bullish. I'm expecting a disruption because we had those gray lines, those black lines represent the market's highs and lows. This is our previous high. This is our current low. This is our previous low, and this is our previous higher high. And so when I see the market, because of, let's say, the news that's happening tonight, comes and goes up like that and makes a bunch of unhealthy price action that's causing a break of structure over here, I can assume, okay, now the market is shifting, so then I can look for a potential setup within this range. So you might, now that I identified the market price action moving, now that I identified the market making its movement, I can identify the range that I'm trading in. So right now, this will be my range, the high and the low that I'm drawing. And then if I want to buy, I always want to split the range in half like that. And then I always want to look for my entries towards the bottom of the range, because the bottom of the range represents where you're, it represents discount price levels. Discount price levels are cheaper price levels, because if you're looking at the price scale, like on the left side, you can see 146, 147, 148, it gets higher when it goes up, right? So if I'm buying, it makes sense to always stay on the low side of that scale. This is how markets work. It's just simple supply and demand and price equilibrium. So yeah, guys, I hope this video was helpful. It wasn't really meant to be a long video. I'm just documenting my journey and just sharing you guys how I trade. I trade smart money concepts. I usually will take, like I said, 4 to 5 trades a week. I don't trade that much, and that's simply because I realize if you're on a higher account, you can literally just take like 4 trades a week, and each trade can be like at 1K or $4,000, and then you can make like 4 to 12K a week. So this is like, it's better or more. There's no limit. So it's just better to program yourself to take less higher quality trades, unless you have a different strategy. But this is how I like to trade. I like to trade simple. I don't like to trade with a lot of noise. And yeah.